So what we're going to go through, guys, apologies for that, is a dummy account. We're going to look at cash. We're going to look at invoices. We're going to look at how you get things pinpoint accurate. But what I do want to kind of go through is the fact that it really is plug and play. So if you're using Xero or QuickBooks, all you need to do is connect your data, and then everything is done for you. When I mean everything, I genuinely mean everything. So it's really, really comprehensive, but means that you don't have to do anything, and you've effectively got a virtual CFO to go through with this. I'm assuming that you can see my screen, guys. Yes, Andrea, we can see the screen. Yes, good. Okay, fine. Super. So what we then have is when we log into Predict is this overview. So the most important thing, as we know, going into lockdown and running a business generally, is cash and how much of it you have. But it's not the only, it's the final product of a lot of things that are happening when you're within your business that you have control over every day, right? All of your operational decisions. So what you can use Predict for on a kind of weekly basis is as a diagnostics, right? It's checking in and seeing if you're going to be okay. Now this organization is not looking too chipper going into the future. So what I'm going to do is give you a bit of a tour, but show you exactly in kind of 15 minutes a week how you can check that you're all right. And if you're not okay, Andrea will then give you the solutions to try and help you get through it. So first thing I'm actually going to do is not look at anything else apart from invoices and bills. Where it's brilliant is because it has a hybrid approach, which means it takes all your profit and loss transactions, all of the things in your balance sheet, your VAT, your tax payments, everything is taken into consideration, and due invoices and bills. So for that short-term view on your business, you can get really, really granular. So if you are looking like that there are issues, what you do is head to the invoices section first every time that you log in. And you look at your unpaid invoices. Now we'll predict when they're going to get paid, but if that's not the case, and if you know that something that we don't know, then you can change the payment date and when you think that it's going to actually hit your bank account, or you can exclude it. Really important that you do this, really important that you reconcile your bank account before you come in and do this, but make sure that you do this because it will give you that front and center. In this specific instance, if there's 10 grand to come in, well, that's a lot of cash flow that should be chased. So make sure you're doing that as much, as frequently as you can. And if you're having issues with it, speak to your advisor about it because they can help with that. Do exactly the same for your bills. Get in there, change any dates that or speak to your suppliers if you can defer things for a little bit longer. But this is where you start first. Then you're going to hit the home screen. And what you can see below your predicted cash is your engine room, effectively. Your day-to-day, the things that you control on a day-to-day basis are your sales, your cost of sales and expenses, right? So the first time that you log in, you really do need to do a bit of an assessment, all right? But the subsequent times that you're doing it, you will know that it's less. It's a scanning activity. And we're managing to do it in about 15 minutes a week, which is not bad considering this process should usually take a day of updating. So what we have here are the sales for this specific account, and what's happened automatically with Predict is it's taken every single account that you have, and you'll see these Futurely Predicts rows. Invoices, bills, journals, spend, receive, cash, any type of transaction that's hitting your account. We're looking at them separately. We're looking for trends. We're looking for seasonality. We're even looking for COVID effects so that we don't repeat those things again. It's really important that we kind of approach your data like your advisor would approach your data. And so use this tool with them to check in with them every, once a month, but you absolutely don't need to do anything in the preparation of it. The really important thing that Predict does for you is it will give you your sales trends. So, each one of them, your sales trends, cost of sales and expenses, you can see all of the trends for when activity is going to happen, like you're going to raise some invoices, but also when you're going to get paid. And those things are different. If I just zip these things up so there's less for you to look at. In this instance, we've got our Futurely Predicts row. So on the cash impact side, All of the invoices that you're raising, for instance, for sales, well, there's two sides to every coin: what you're raising and when you're going to get paid. So it will assess and aggregate all of your customer payments. Again, things that no one is going to do that manually. So it really is giving you this live view of when cash is going to hit the bank and when cash isn't going to. And you'll also see that there's a little green hover. Every single predicted number you can hit and find out how we've calculated it and why. So based upon, this 4-hour package activity, so a sales row that's 4-hour consulting for this specific client, that Predict has identified that it's going to be split from, because of the delay in the payments. If we go back to the activity view, you'll see exactly the same, but you'll see the rationale behind it. Why we do this is to really create trust in the numbers. And if you don't agree with it because you know something that we don't, for instance, that there's a new contract that you've won, or something is not trending as you would like it to, not only do you get the explanation, but you can then toggle things off and create your own predictions, which is what this one is. So if I zip this one, if I close this one, and just show you how you can create your own manual predictions. So in this instance, Futurely Predicts is saying that there's not a great trend in the accounts we've taken last year's value as a base. What it will do is look for growth. It does look for seasonality. All of those things will be applied. Journals, I'll show you in a second, for things like wages. So all of your staff are forecast automatically as well, which is just so time saving because it's a very complex thing to do. So if we turn off the Futurely Predicts row and turn on these different assumptions here, these are all ones that we've created ourselves because you might know something that we don't, and it's highly likely that you will. The best results will happen with software plus a human, i.e. you or your advisor, if that you want them to help you with this. But just to quickly run through, because this is a little power half hour. If you sell any services or products by unit, you can use the units forecasting methods. So you can see here, we've got 3 different price changes here. We're going to sell 10 of whatever these things are: weekly, monthly, quarterly. It's up to you what you choose. Just for November, no growth or refunds predicted. December, we're going to increase the price and we're going to sell more, and then it drops back down again in January. So that's the kind of thing that you can create yourself to test out different assumptions or make decisions, to test out decisions before you make them. So if you're thinking about doing something ahead of time, test it here first, see what the impact is on the business. And then, of course, the cash impact, when you're going to get paid for these things, because it's both sides of the coin always. So that's the units. Repeating example, this would be for anything like rent or things that are going to be the same amount every single month or week or day or quarter. You can use this. You can increase each period by a percentage or decrease it, and the same by an amount. So you've got a lot of tools. And then we've got, for instance, if you did want to model out Futurely Predicts, turn these ones off because you wouldn't have created those. These are just here for an example. But you might want to just create, well, what's a worst case? So if I do 50% less than what the prediction's looking like, how is that actually going to impact me? So if I just edit that one, you can see that just simply we've just entered in the 50% reduction in the accounts above. And that will then, really let you be in control of all of the different scenarios that could play out for your business. So first time you load it up, you're just going to scan every single one of these accounts, the accounts that are in your chart of accounts, because everything's just pulled through automatically. If you want to make your business look more like your business, for instance, and group things together, you can do that too. So we can create groupings of accounts, call those hourly packages. So everything can then be, exactly as you want to see it. And then the final thing that you're going to go and check is your balance sheet. You're going to get over to your financials. And the reason why you're going to do that is to check your VAT. So all of the VAT is going to be calculated accurately from actual and predicted transactions. It's the only product in the marketplace that does this globally, to my knowledge, apart from ERP solutions. Andrea's nodding. And it's just such a big, bulky, outlay for you guys typically that This is why we wanted to make it, bang on and work as accurately as we possibly can. If you're on the accruals or the cash-based VAT scheme, you have both options. So we've got you covered with that. So in the settings area, you set all of these things up once. That's it. Then as we sync data, which we do twice a day, all of these calculations are being updated. You need to do nothing. So again, use Predict as a sat nav. It's there as a business sat nav or guide. If you have any VAT deferment because you've taken that through the government schemes, you can enter those in. We're actually going to be adding in the ability to split those over a 12-month period, because the government have also said that you can do that with this time to pay deferment. But also, I just wanted to the final thing that I'm going to kind of talk about, because this is literally all you need to do is checking, but you'll see things like, your wages. The wages have just been predicted automatically because we take in payroll journals and do that too. So 844 in actuals and 844 going on beyond. It's quite powerful. It does a lot, but it does a lot that you don't need to. So, if we go back, I'll go back into the slides in a second, but you've got basically a 5-point check. Invoices and bills, sales trends, cash trends. Do the same things for your expenses and your cost of sales. Check your tax, check your staff, check your cash afterwards. So the cash is the final thing that you look at. In this instance, not looking great. We've got some red lines here for a period. This is where Andrea then comes in to say, well, look, if this is the case after you've checked it, and we need a solution, this is how we go about doing it. So I'm going to stop sharing and I'm going to find my slides again, because I had an absolute mare at the beginning. And whilst I do that, Andrea, you can start introducing Swoop and what you guys do.
Great. Before I do, because I want this tool myself, how far does it go out?
Oh yes.
What's the period?
Yeah, so we bring in a year's worth of actuals and 3 years worth of predictions. So, you really can zoom in on that short term, medium term, long term, et cetera, et cetera. So let me just get these slides up and then we can talk about what the lending market is doing right now. Not sure.
Cool. Well, first of all, I love the tool. It's interesting because as a business owner myself, this is what I do all day long, looking at my own three-way forecast, and it's so important to have the three-way, whether it's a lender or you're going for investment or whatever it is, having 3 years of cash flow, P&L and balance sheet. Yeah. And I can tell you from severe pain of doing these, you think you've got everything worked out, and then you get to the balance sheet and you're like, why does my balance sheet balance? And literally you're there playing around with numbers. Hours I have lost. So it's an amazing tool. Really, really amazing.
The thing that we hope with it as well, Andrea, is the fact that you don't need to be a finance professional. We've done all of that for you. You don't need to understand how all the double entry accounting works, because that's not your job. Your job is to run your business. So if we can do all of the heavy lifting and give you this live, adjusting view, which will spot trends before you will. That's the thing as well. This extrapolation out of either, the profit and loss side, so the activity of profit and loss. This is my dishwasher going off. Can you believe this, guys? I'm really sorry. I'm going to mute in a second. But also the flip side of customers starting to pay you late. Those sorts of things will be identified and flagged so that you can actually see what it's going to look like in your short and medium term. So anyway, I am going to stop talking and mute myself.
So I'm just going to give you a quick sort of rundown, because you're probably hearing all these different announcements. You might have your bounce back already. You might have heard something about top ups. You just might not know. What are your options? And this is whether you're seeing a gap in your cash flow, or whether you're thinking, okay, great, but maybe I just want to build a little cash cushion because I haven't actually quite worked out how, say, Brexit's going to impact my business over and above second lockdown. So I just wanted to give you a quick rundown. So what we do at Swoop is we partner with Futurely, and then once you've actually had a quick look and thought, I think I might need to talk to someone or get matched or look at what I already have, then you can register with us. And as we do, we look at your data also, so you can integrate your Xero, your QuickBooks, whatever it is that you want to integrate. And then what we do is match you to all of the different forms of funding that are available today in the market across grants, loans, and investors who are looking for young businesses to invest in. And then what we do is couple that, like we've just been chatting about, matching that with human expertise to help you along the way. So just a very quick synopsis of, if you've gone for your bounce back and you haven't taken the full amount that you were eligible for, unlike before, the government has now said you can go back for a top up, because suddenly we're in a second lockdown, which none of us would have forecasted the first time around. So you can top up as far as your 25% of your turnover. Also, some good news from the previous announcement was that Bounce Back is now got a repayment period of 10 years rather than 6. So what that's going to do is actually free up your monthly repayment amount, and making it more affordable when it comes around to paying the capital amount. So just to be mindful of, if you get a bounce back, there's no repayments, no capital repayment and no interest repayment for the first 12 months. And thereafter that, it's 2.5%. You might have maxed out on your bounce back. And so this is therefore where we can also come in and look at, what other needs do you have? Do you have assets, for example, that you don't realize you could refinance? Or do you need some assets, but you can't afford it because you've already taken out your bounce back and used it elsewhere? So this is where you can start to combine products. If you're looking at a CBILS, so you're looking for more than £50,000, again, it's just mindful that you might have heard, oh, well, nobody's really lending on this, or my balance sheet doesn't look good. I've gone on to Predict. I see that my balance sheet doesn't look great. And, my bank told me I wasn't eligible. It's really important to know that where we started with lockdown and where we are today are two very different places. So yes, you might have got a rejection from your bank or another lender, but there are 110 lenders of CBILS now.
So
and
many
each
more
of them
now,
has,
Andrea, isn't it?
I
So,
mean,
so
it's
many. It's amazing.
yeah, totally different world to when we were back here first time around. And there's different lenders for different credit ratings and different credit history and different balance sheets, etc. So don't be put off if you're looking at your numbers and you think, oh my God, this doesn't look great. Do not be put off, and get in touch with us, and we can help you through it.
Can I ask a question, Andrea? Sorry, just a quick one. If you've taken out a bounce back and then you need more than it gave, can you then go for CBILS? Because I know that you couldn't, but can you now? Or yes, great. Okay,
Yes,
that's huge.
you absolutely can.
Yeah.
Yes, it is. So you've maxed out on your bounce back, and now you realize it's a CBILS. Absolutely, you can. And what they do is refinance your bounce back as part of the loan, so you can repay the bounce back and then have your CBILS. CBILS, you're not paying interest for the first 12 months. The majority of lenders are offering capital repayment holidays on that as well. And then you have an interest rate. It's working out, the average is about 5 to 5.5% on the CBILS interest rate side as well. So, and next question that I get asked a lot is, well, they say that you can only go up as far as £250,000 on CBILS before you have to give a personal guarantee. So no personal guarantee up to that amount. That's per lender. So you might need 250 from one lender, and you might need 100 from another, and you still don't have a personal guarantee. So it's about understanding the nuances and combining these correctly. The other area that I would say that we're now helping a lot of businesses with is, you've maxed out on the loan side of things. What else is out there? And everything from green grants to capital and revenue grants that are out there, depending on where you're located. That's what we're surfacing for our customers. And last but certainly not least, especially if you're looking at your Predict tool, is you might start to realize how much you're paying for services. And you probably don't realize, but majority of businesses are being overcharged for services because we can never quite work out, is this a good deal or a bad deal? Because we just can't compare like for like. And so that's some of the work we do on the data analysis as well, is compare and get you reductions in those services. So it's about, how do we get your bottom line looking better? How do we conserve that cash and get more into it? And then you can rerun your predict and include your new prices that you're getting for, say, your energy or your banking, etc., and see how can we continuously improve what your cash position is. I would say to anybody on this call today, where you really, really want to be aiming for as a business owner is, can you survive all of the uncertainty we're all facing till at least Q3 2021? So if you can look and keep looking at your predict tool, keep playing with the numbers, make decisions, and say to yourself, let's get to Q3 2021, even with all, do a minus 50%, do everything and see where you get to, because a lot of the uncertainties will have been dealt with then. We'll have gotten over the first bit of Brexit, we'll have a vaccine, looks like, by then. So that's where we're aiming for with our businesses, is to try and get them to that point. So
there was a really interesting point as well you made yesterday, Andrea, was that because the lending is so good at the moment, the government-backed lending, if you can take it. You don't have to spend it, because 2022, your assessment of 2022 and getting credit then is not as rosy, is it?
Yes, it's so interesting. So there are businesses who are actually doing fine. They're online businesses, or they're just not massively impacted. What we say is, we see this with a lot of our customers as well. You're not paying interest for the first year, so you can put it in a deposit account and actually earn interest from it until the moment comes when the interest payments start coming through, and then you can repay it with no early repayment charges. So what you're doing is planting a contingency in a deposit account, which is actually earning you interest, and making sure no matter what happens in the world over the next 6 months that you have that cash cushion there to be able to withstand whatever is coming. So as I said yesterday, these government schemes, it has been extended to January 31st, but the idea behind it is you never want to look for finance when the market is not in a good position, and lenders are lending at a faster rate than they've ever done so. There'll come a time where they don't have anything left to lend. And so we're predicting late 2021 into 2022, the market will absolutely decline in terms of lending that's available to even viable businesses, because simply they're doing so much of it right now, 5 times than they normally do. They've done in 6 months. So yeah, that's kind of just a quick snapshot in case that's
just a note on the furlough scheme as well. If you are furloughing any staff, you can work that into Predict too, so that you can see the additional uplift, because any of the account lines that you have, you can create reductions, increases, whatever you want with your own customization.